Hello my dear future chartereds. Welcome to paper discussion series by More Academy. I am Professor Anand More, your guide to CA career. I am sure that you have subscribed the channel of More Academy and are sharing these videos too. Do comment on the videos to let me know your opinions and suggestions. I'll incorporate them in the next videos. Now in this video, I'll be discussing question number 5B from December 21 examination of CAFC accounting. This is a question from the topic of final accounts of manufacturing entity. A bit lengthy question, but an easy one. Let us go ahead to secure our 15 marks. On 31st of March 2021, the trial balance of Mr. Black was as follows. On the debit side, you have stock on 1/4/2020, raw materials, WIP, finished goods, debtors, carriage on purchases, bills receivable, wages, salaries, telephone and postage, repairs to office furniture, cash at bank, office furniture, repairs to plant, purchases, plant and machinery, rent, lighting, general expenses. On the credit side, you have sundry creditors, bills payable, sale of scrap, commission received, provision for doubtful debts, capital account, sales, and bank overdraft. Now the adjustments tell you following additional information is available. Stock on 31st March 2021 were raw material 1,62,000, finished goods 1,81,000, WIP 78,000. Salaries and wages unpaid for the year ended 31st March 2021 were respectively rupees 9,000 and 20,000. Machinery is to be depreciated by 10% and office furniture by 7.5%. A provision for doubtful debts is to be maintained at 1% of sales. Rent is to be charged as to 3/4 to factory and 1/4 to office. Lighting is to be charged as to 2/3 to factory and 1/3 to office. Prepare the manufacturing account, trading account and profit and loss account for the year ended 31st March 2021. It's a 15 mark question, a relatively easy question. Let us now consider the observations which will be necessary for the purpose of solving the problem properly. Now the first thing is problem has not asked balance sheet. Instead, only the manufacturing, trading and profit and loss account is asked. So there is no need to give second effect. The raw material and WIP are dealt with in the manufacturing account, whereas the finished goods are dealt with in the trading account. The given trial balance contain items of assets and liabilities too. For example, here you can see there is office furniture and then there was somewhere sundry debtors, etc. Similarly, on the liability side, you are having bills payable and you are having sundry creditors. So the trial balance is giving you assets and liabilities too. Assets are useful to calculate depreciation and RDD. Liabilities are of no use to us because the problem has not asked us to prepare the balance sheet. Rent and lighting both are to be distributed between manufacturing and P&L account. There is a clear-cut adjustment which tells you that rent is to be charged 3/4 to factory, that means manufacturing account, and 1/4 to office, that means P&L account. Lighting is to be charged 2/3 to factory, that means manufacturing account, and 1/3 to office, that is P&L account. So for rent and for lighting, we'll have to be careful. These items won't go to any single account as such, but they will have to be transferred proportionately to different accounts. Salaries and wages both have adjustments of outstanding, that is given here. Salaries outstanding rupees 9,000, wages outstanding rupees 20,000. So we'll have to be careful about them. These are the basic points which are necessary to solve the problem properly. Now in the next step, what we are going to do is we are going to identify each of the item given in the trial balance. They will be going to which particular statement, because we will be preparing three statements now. One is a manufacturing account, one is a trading account, and one is P&L account. Last is a P&L account. Out of these three different statements, three different accounts, all these different items, where we'll have to write them? Should we put it in the manufacturing account or trading account or P&L account is required to be identified. So first we are going to classify these items into manufacturing, trading or P&L. What I'll do is I'll write M wherever the item is to be transferred to manufacturing account. I'll write the letter T when that item is to be transferred to trading account, and I'll write the letter P for those items which are required to be transferred to P&L account. So let us make the classification quickly. So here is the classification. Opening stock on 1/4/2020, opening stock is always coming on debit side. Raw materials will go to manufacturing account, WIP will go to manufacturing account, finished goods will go to trading account debit side. Sundry debtors asset hai, so we'll have to ignore the same. Carriages on purchases, manufacturing account debit side. Bills receivable, asset, so it will be ignored. Wages, manufacturing account. Simple rule, please keep in mind, anything coming on debit side of trial balance will go to debit side of some or other account, and anything coming on credit side of trial balance will be going to some or other account credit side. So which side is very simple. If it is debit side of trial balance, then some or other account debit side. If it is credit side of trial balance, some or other account credit side. Only thing is now in which account we are required to record it. That's what we are going to decide. Wages will go to manufacturing, salaries will go to P&L, telephone and postage indirect expenditure P&L, repairs to office furniture, office indirect expenditure P&L, cash at bank, office furniture, both of them are assets, so to be ignored. Repairs to plant, plant is required in factory, so it should go to manufacturing account. Purchases of raw materials, so manufacturing account. Plant and machinery is asset, so ignore the same. Rent, partially to manufacturing account 3/4 and partially to profit and loss account 1/4 as mentioned by the problem. Lighting, partially to manufacturing account 2/3 and partially to P&L account 1/3. General expenses, indirect expenses, so P&L account. Sundry creditors and bills payable, both of them are liabilities, to be ignored. Sale of scrap will go to manufacturing account credit side. Commission received is indirect income, P&L account credit side. Provision for doubtful debts. Now we'll have to be careful. This is the amount of RDD as per trial balance. This goes to the P&L account debit side in that 4-line adjustment which you normally do in 11th and 12th standard. So provision for doubtful debts will be deducted from the current year provision which you are going to create on the debit side of trial balance, on the debit side of P&L account. When we are preparing the account, at that time I'll again discuss the same. Capital account is a liability, can be ignored. Sales, trading account credit side, bank overdraft is a liability, that can be ignored. So once we have classified all the items of trial balance, let us now focus on the items of adjustment. Where are they going to be? Now it's a very simple point to be kept in mind that generally adjustments are supposed to have two effects. Whereas in this problem, adjustments are also going to have only one effect. Reason is problem has not asked us to prepare the balance sheet. So we'll have to give only one effect of the adjustment. Second effect of adjustment is not required to be thought about. They have told you closing stock is as follows. Since it's a closing stock, it will have to go to credit side. Raw material closing stock will go to manufacturing account credit side. Finished goods closing stock trading account credit side, and WIP closing stock manufacturing account credit side. Salaries and wages unpaid for the year ending on 31st of March 2021 were respectively 9,000. Salaries 9,000, so it will go to P&L account. Wages 20,000 will go to manufacturing account. They'll have to be added to the amount of wages and salaries as per trial balance. So I have made a small green tick mark here to help me remember that these two items cannot be written at the same amount at which they are appearing in the trial balance. I'll have to put them in the inner column in the main answer, so that I can make the adjustment of outstanding to be added to them. And then only after addition, the amount will go to the outer column. Next is machinery is to be depreciated by 10%. So the depreciation on machinery, that means plant and machinery, there is a small tick mark I'm putting. I'll have to use this 7 lakh rupees and I'll have to consider 10% on the same. That comes to 70,000, and it's machinery, that means it is required in factory. So it should go to manufacturing account debit side. Office furniture by 7.5%. So office furniture is here. I'm again putting a small green tick mark here to help me remember that I'm required to consider the adjustment of depreciation on the same. But office furniture obviously is an indirect expenditure, so the depreciation on same will also go to the P&L account debit side, not to the manufacturing account. A provision for doubtful debts is to be maintained at 1% of sales. Now be careful, it is 1% of sales. They have not told us to calculate the RDD as a percentage of debtors, but they have asked us to calculate RDD as a percentage of sales. So you will have to calculate 1% not on the amount of 2,40,000 but on the amount of 16,72,000. That is the amount of current year RDD. From this current year RDD of 16,72,000 into 1%, we will be deducting the amount of old RDD 16,500 in the P&L account debit side. Then comes the next part. Rent is to be charged as to 3/4 to factory and 1/4 to office. We have already discussed the same. Lighting is to be charged as to 2/3 to factory and 1/3 to office. That is what we have already discussed. So now let us prepare the manufacturing, trading, profit and loss account based on the different points which we have seen just now. So here is our manufacturing, trading, profit and loss account. Don't forget to put the heading in the books of Mr. Black. That is the problem name given by the problem. Manufacturing account for the year ended 31st March 2021. That's a heading for manufacturing account. Trading account for the year ended 31st March 2021 is a heading for trading account. And profit and loss account for the year ended 31st March 2021 is the heading for P&L account. As we have decided, anything coming from debit side of trial balance will have to go to either manufacturing account debit side or trading account debit side or P&L account debit side. And anything coming from credit side of trial balance will have to go to manufacturing account credit side or trading account credit side or P&L account credit side. So these are the very basic simple points. Let us now consider all the different items as we have classified them as M, T, P, etc. So here raw material consumed is the first heading in which we are going to consider opening stock of raw material, add purchases of raw material and closing stock of raw material, which we could have written on the credit side of manufacturing account. It is preferred to always write it as a deduction from the opening stock plus purchases. So now we can find out the cost of raw material consumed in the outer column, then opening stock of WIP, then wages 1,30,000, and I had already told you that it is required to be written in inner column because there is an adjustment of outstanding. So let us add 20,000 there. Outer column is 1,50,000. Carriage on purchases means carriage inward. So manufacturing account debit side 15,000. Repairs to plant. Plant is used in factory. So it is purely debit side of manufacturing account 11,000. Rent, not the full amount, but only 3/4 amount of rent, 45,000 here, and 1/4 amount of rent in the P&L account debit side. Lighting, 2/3 here in the manufacturing account debit side and remaining 1/3 in the P&L account debit side. Depreciation on plant we had already calculated 10%, that is 70,000. Then closing stock of WIP. Remember, closing stock of raw material is deducted from combined amount of opening stock and purchases of raw material. But closing stock of WIP is not deducted, it is shown on the credit side. Sale of scrap, and then the balancing figure is called as cost of goods manufactured. This 11,90,000 will be transferred to trading account debit side. In the trading account debit side, we have opening stock of finished goods and the amount of cost of goods manufactured just now transferred from manufacturing account. On the credit side, we have sales and then we have closing stock. So the total is 18,53,000 and the gross profit is 5,08,000. This gross profit will then be transferred to P&L account credit side, to which we will add the indirect income of commission, and then salaries inner column, add to that outstanding 9,000 outer column 1,09,000, then telephone and postage, repairs to furniture, depreciation on furniture, 1/4 amount of rent, 1/3 amount of lighting, general expenses, RDD 1% of the amount of sales. So it is 16,72,000. There is some printing mistake here. So 16,72,000 into 1% is equal to 16,720 minus the existing provision old RDD 16,500. So outer column is 220. Then take the total of trade P&L account, find out the balancing figure. That is what is your net profit. And here you get your 15 marks in your pocket. Very easy question, little lengthy. You need to be very careful about where you are writing a different item. You should not confuse between manufacturing, trading and P&L account items. You should not make mistake about 1/4, 3/4 and 3/4 and 2/3, etc. You are also not supposed to make mistake about closing stock of raw material and closing stock of WIP. These are the basic points to be kept in mind, and the last point is 1% of sales in relation to RDD as compared to 1% of debtors, etc. Otherwise the problem is very easy. So here you have completed, actually speaking, the full paper if you have started from question number 1 and you have continued up to question number 5. If on the other hand anybody of you has left any question in between as option, then you need to still solve question number 6. So in the next video I'll talk about question number 6. Thank you very much.